Hi there, traders. Now, I've got a really good question here about trend lines and a trade setup that one of our traders got into on sterling. And they got into the trade. They ended up just taking a small amount of cash out of the trade, and were wondering if their plan was correct, or how was the setup? Was the plan? Did they do the right thing, etc.? Now, it's easy to say in hindsight, but this trade actually is a very good example of quite a few things. So let me just explain, give you a run through, and show you what you can do with this, because this is actually, you're getting into more, I wouldn't say advanced analysis, but just, this is all about trusting your plan, trusting your analysis, sticking the plan in, let the market do the work for you. It's a very good example. Now, just having a look at sterling, right? We've got two defining trend lines. Okay, we've got the resistance line coming back up from February 23rd, 24. And we've got the low here in March or April, 11. So you've got these support and resistance lines. Now, they are the main trend lines that the market is looking at. Now, they're 100, 150 points apart. Now, the part of the market in question, right, comes back to this little period here. And you can see there's a bit of a sloping down trend line here. Now, let me just go into this. So first of all, I'll be very confident using these big trend lines because I know the whole market is looking at them. When it comes down to looking at shorter time frames, you've got to ask yourself the question, is the market looking at this? And this is why we look for, if you've got 3 or 4 touches on a trend line, well, then the market can't miss it, right? That's the defining aspect of your trend lines. Now, if I just zoom in here, right, and we've got a starting point here, this is the area in question. Now, if I draw a trend line, say from this point here so you got one, you could say that it's in a pretty short period of time frame, but 1, say 2, at least 3 touches there, right, over the course of a day, day and a half. Now, when it comes, like it shoots down, dollar strength, and you're thinking, okay, now what's the setup here? You see sterling rally, right? And there's not, so there's one key aspect. What's sterling doing? Well, it's range trading for the moment in a big range. Now, the question is, when it gets back to this trend line here, is this a good opportunity to be getting short? Now, that's the whole thing. So there's a couple of things to consider. Now, one aspect I would be looking at is make sure you know why it went down and why is it coming back. Now, if the reason it bounced is just a correction of the move down, like say there was some news, they said, we're going to cut rates in England, which didn't happen. I haven't gone into it close enough. I haven't got the time just at the moment, but it's dropped down. Say that was just corrected. Well, it's just a correction in the market, right? And there's no major change fundamentally in sterling. Well, this is just normal price action. Okay, we've just got it in a pretty good period where it's corrected the move down. So you're looking at a number of different things. Now, one thing I would look at very closely is how far has this thing gone, right? So when it's rallying from the low here to back to the trend line, it's moved 132 points. Now I can tell you after 30 odd years of trading, the currencies don't generally move more than 150 points unless the central bank pushes the market, right? With changes of policy and these sorts of things. So when it gets back up to there, you're looking at that and going, yeah, you know what? That's actually really good. This thing is going to fatigue. Now, just because it's got 132 points doesn't mean it's going to fall away. Doesn't mean it's just going to drop, right? It can just go down and start trading sideways, which is sort of what it did for about 6 or 7, 8 hours. And this is where our trader took out his cash. Got a little bit, you see a lot of these opportunities and you think, well, I'll just take the cash here and get out. So that's not a bad decision. But let's just have a look at a bit more. There's a bit more detail here. Now, one thing is you can be considering is look at the price action up here. It's a little bit, well, it's got a bit more shape. Now, if you wanted to go into pennants and the old sort of terminology for technical analysis, I won't sort of bore you to tears with that. But one of the key things is just look at the price action up here around where this has gone. And this is what I would call a pivot point. See, sterling has gone up here and it's just jamming away in this sort of pennant sort of formation. And then it's dropped down below it, right? To me, when it comes back to this level, we've got a resistance line. Even though it's short term, we do also have a backup sort of horizontal pivot line there coming in at the exact same level. And this should give you a bit more confidence around to get into the trade, especially with the fact that it's already moved 132 points. Now, the key to this trade is, why is it moving up? If it was a fundamental shift from the central bank, well, then you would probably balk at the opportunity, but there wasn't, right? It was, if anything, it's a short-term squeeze to the top side. You've come back, you've hit a double whammy resistance level. Now, the core resistance level is above up here, right? So you've got, and that's, what is that, 15, 20 points above that level as well. So that you're thinking, well, if it even gets through there, it's going to find selling above that as well. So that's something to consider. So with the main trend line back here, if anything that you could adjust would be the lot size on the trade. You're like, yeah, this looks pretty good. I've got a massive spike up. It's not going to go higher, or it shouldn't straight away. I've got sort of 2 resistance levels at the key level. Yeah, put the trade on and let the market do the work for you. Okay, once you've identified the opportunity, right, now it's time. You've got all these components. The probability of success here, and one other thing I forgot to mention is it's massively overbought at the same time. It hits this level. So you got 2 resistance levels at that point. It's moved 132 points. It's overbought. Everything, like, this is like smelly. This starts to look really like a good opportunity. And this comes from just going into your chart, seeing build-ups. Now, usually this is a pretty short time frame, but it does have structure. And you know what? If you look at the outcome here, I mean, this is easy in hindsight. It moved down to 93 points from the trend line. Now, if I was realistically getting into the trade, I'd be getting into the trade around 20, right? 139.20. So you take off an extra 9 points. You're looking at 84 points, right? And if you're just looking for trading opportunities, this is a good one to give you an example of where you can find trading opportunities when the market's not really giving you a hell of a lot, right? Now, how do you get into this? Well, you've got to trust your analysis, and then you stick the plan in. Get into the trade, okay? Have your stop loss set, whether that's, I would generally go with a smaller trade size. Make sure your stop is above this level. So you might have a 30-point stop loss or 35 points. That would sort of, get you into the trade comfortably without too much worry. And that's why you decrease your trade size. You get the same risk profile, and then let the market do the work. Now, once you're, say, 20 points in the cash, move that stop loss. Let me just delete some of this stuff. So if your stop was up here, or even if it was just 20 points above, or 25, 30 points above your entry level, okay, once the trade is, say, 20 points in the cash, lower your stop loss to break even. Now you can relax, let the trade do its work. Your job's done, right? You got a no risk trade on. And then, as the trade goes, say you stick to the normal sort of generic profile, you've got your 75-point take profit. Well, you'd wait for that. And well, you generally would probably be taking profit without even being at the screens. Now, the key to this trading opportunity is a number of different things, like the outcome where you take profit, right? You could have your trailing stop loss moving with the market. So even if the currency did come back, it would take you out for, say, 20, 30, 50 points, depending on where your trailing stop setup is. Now, this is all well and good, I understand, but you've got to just think, use your analysis skills to identify the opportunity. We've got a high. Well, actually, let me just come back to the initial point. You've got a really good profile here. Okay, sterling. First of all, what is sterling doing? This is what you need to do. Okay, it's trading in a range, and that range is narrowing up the further it goes along, right? The influence from the vaccine euphoria is sort of dissipating. There's a bit more fundamentals coming into play, but overall, sterling is banging away in between these two key support and resistance trend lines. Then you see a trade set up like this, where there's a lot of price action. It will drag the market's focus towards it. So then you come back into the trade. You're now sort of just going back through the routine. Okay, do I have a trend line that's got, say, at least 3 touches? Yes, you do. So when it comes back to here, the market is waiting for sterling to get back to this level to sell. Now, there's a better profile on this. As I said, you've got like a pivot point here where once it got up above this level and then broke down, it's sort of like it stayed above that level. And then once it breaks down, it stayed below that. And so you've got a double resistance level. It's moved 132 points. It's massively oversold. This is a nice structure. The only thing is, for me, the only like question mark is, do I get short here, or do I even try and get in a little bit higher at the main resistance level? I would consider like potentially breaking your trade up. Have half the trade size on here, half the trade size on here, and your stop loss above the level. Okay, if you wanted to be conservative. If you wanted to be aggressive, you do get in at this level, because you've got, say, 1, 2, 3, 4, you get 4 or 5 ducks lined up here. If all the ducks are lined up, you've got to get into the trade. That's when you trust your analysis, you put the plan into action, and you let it go. Okay. Now, the main part, one of the key things, if you're looking at our FX Pro Trader course, is, so this price action here, this is not uncommon below trend lines. So you've got to give the market time to move. Once it hits the levels, everyone sort of sits there, they've rebalanced their positions, and they're like, okay, now let's see where this thing goes. It's all about supply and demand. And if it just starts trading sideways, it starts drifting, well, then the job's done. The first part of the trade is the longest. It can take 6 to 8 to 10 hours for it to work out if it's going up or down. And when that's decided, the next move happens much quicker. Okay, it starts to move to the next level, and that's where the cash is. So there's a number of different things here. Trust your analysis, give the market time to move. Okay, like even if the currency is here, like if you got in say 20, you're still in the cash, it's still sitting below the level. Your plan is still intact. Okay, you've got your stop loss above the trend line. You've got your risk assessed, the opportunities in play. All you'd be doing is looking across the market, say every 5 or 6 hours, and having a look. Is there any fresh news out that's going to change this or work in my favor? Now, if there isn't, well, then you don't need to do anything. You don't need to come and manage the trade if there's no new news out, because the currency is in the process of just working through the market. And this example, as I said, is a good one. I mean, even if you had a trailing stop loss in here, right? 138.50, it hits this level here. Okay. Your trailing stop loss would be probably taken out. Maybe up around 138.70, 75 or something like that. You're still locking in sort of 50 points. That's cash in the tin, right? So great opportunity. Good job, Joshua, for identifying this. And this is a good example of just getting all those analysis features into play. Don't forget, technical analysis, what we're trying to do is just see what everyone else is doing. And if we can identify this and you go, wow, there's so many different profiles here that actually really, you know what, really give us a good opportunity to be selling at this trend line. Well, you know what? Now's the time to stick your cash in the market and let the market do the work. All right, guys, hopefully that's helpful. If you have any questions on this, jump on online and ask us, and we'll answer your questions. All right, guys, have a good one. Cheerio.